Hello everyone, this is Matthew Frailey with BreakpointTrades.com. I've been breaking you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY system. We have many other systems as well. We've been doing this for over 20 years now for individual traders and professional institutions, which I consult with weekly. Okay, so let's go ahead and get started. First off, this is our back-end recorder system for our standard website newsletter. So I'm going to go ahead and get this started here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, April 19th newsletter. As you can see, tonight's newsletter is divided into 8 major sections. Before we get into the general market, we're going to discuss the mechanical systems. And we have quite a few open trades there. So I want to go through that quickly. Again, no real changes, but we do have some new stops to discuss. And I didn't add any new trade ideas tonight, not in this volatility. This week is options expiration. Remember, that's on Friday. And our hope is that the market kind of holds up into that. But I do think it's vulnerable here. You know, the S&P could be vulnerable for perhaps a larger fourth wave pullback, maybe 100 plus points. Kind of hoping that waits until next week, but definitely I'm seeing that in the cards. And as far as the STS KISS trend tables, if you're viewing this on YouTube, you can't, obviously access that through YouTube. You need to sign up for our website and you get access to that. That's updated once a day, over 1,000 stocks there with various trailing stops. Here's some various headlines still for this week. Thursday, Fed Chief Waller at 12 p.m., Bowman at 3 p.m., Harker at 8 p.m. Friday, Tim Cook. And also remember OPEX. So here's the other remaining items for the week. On Thursday, we have the initial jobless claims, existing home sales, and of course PMI manufacturing on Friday. Next, item number 2 shows the index sector table, what transpired today and this week. You can see the indexes still have a slight gain on the indexes, albeit slight. Today was a little bifurcation. Again, what essentially happened, you can see not much movement on the indexes for the close, but the indexes were down pretty strongly in the morning, and futures especially were down overnight pretty nicely. We had a nice gap down in the morning on the cash indexes. They recovered most of those losses. Futures are down a little bit this evening. Tesla reported just after the close it is down about 3%, so that's affecting things a bit. And as far as the major market sectors, kind of a 50-50 mixture of up and down here, as you can see. Banks had a decent day finally. Currencies, US dollar up 0.2%, up 0.36% for the week. Cryptocurrencies are absolutely got nailed. Steve showed Bitcoin as a rising wedge last night, and that played out nicely. And we also had a 2-hour chart, head and shoulder pattern, which played out for a break and a back test. And I'll show that when we get to there below. Commodities, all the commodities down today. Look at this. General DBC down 1.4%, crude oil down 2%, natural gas down 6%, still up 5% for the week though. Copper down, agriculture, corn, wheat, coffee, all this down. Precious metals, gold and silver were mixed. However, the stocks were down. Remember, that area got overbought. We've been looking for a correction and we've got it. And the stocks tend to lead, like I said, and they've been leading to the downside short term. As far as bonds, not a lot of movement here today. Pretty benign. Next, item number 3 shows the economic news calendar, which I already discussed. We have initial jobless claims on Thursday, existing home sales, PMI on Friday, and various Fed speakers. And of course, earnings. We're in earnings season now. We've had some banks report. We had Tesla report this evening. And earnings season is going to start in a big way. Next, let's go ahead and start with the mechanical systems. So this easy table shows you kind of a brief view of all the systems. So first off, we have the 21 reversion to mean systems and a breakout system. So that's 22 different systems. I have them segregated here with the SPY ETF and ES futures, which we send out trade notifications for whenever they do a trade. Again, most of the systems are in cash, but we do have, interestingly, 4 open positions. We have a long position, 2 long positions on SPY and ES via the breakout system. That's a non-reversion amine system. It's just like it sounds. It's breakout. The breakout system triggered on March 31st, and it has stops. So currently on SPY, every day that stop's been moving up. It's currently 403.50, and on ES or MES futures, which I like to trade, for 41.18, 41.20 is the stop. But at the same time, we also have 2 open shorts via the DVDS system on April 5th for for the SPY. Oh, there is a second entry here as well. Apologize for that. This table does not reflect that. I will update that this evening. But there's a second entry on the DVDS, and on ES we have a first entry which we entered yesterday. Okay, so essentially these 22 systems here are pretty hedged against each other until one of them closes out. Now on the KISS trend following systems, for the indexes here, they're still long with trailing stops. Okay. Next, image number 5. This shows you not the non-KISS trend systems, but the 2 breakout systems at the top on SPY and ES, which went long on March 31st. Again, stops continue to trail up. And on SPY, we have DVDS short, first and second entry. And on ES, we have a first entry. Again, whenever these give a trade or exit or whatever, I will send out a trade notification to all subscribers. You simply follow along. Next. Moving back to the general market indexes, so chart number 6, here's a weekly view of the indexes. Again, you can see small moves so far this week, no changes. They're still overall in the same patterns that we discussed on the weekend that I discussed on Monday. Dow still in this pattern here, hasn't broken over the trend line. S&P cash, NASDAQ are still in their patterns. Russell at the bottom, still struggling below resistance trend line. Next, image number 7. Here's a weekly view of the S&P. Again, no changes, like I said. Remains to be seen if we can still get up to that upper levels like the 61.8 fib, 4,300. All right, over time. But I do believe we are going to have a pretty good correction this year still. Another good sell-off. Don't think the bear market's over. I don't think we're going to new highs, but we are uptrending right now. One thing I will be watching over time is this trend line on the RSI 14. A break of that will be a good short signal, but again, that's far away. And remember, this is a weekly time frame. I do think short term we're getting close to some sort of fourth wave pullback, which I'll discuss in a minute. Next, chart number 8. Here's a daily view. So we had a little coil here which got taken off the chart, but we broke out of that a couple weeks ago. We've pushed up, and we're just kind of chopping around here just on top of this upper trend line now. And you could draw a steep uptrend channel, which we're still holding. So no changes here. We do have a little RSI divergence up here. No break on the RSI 14 trend line. Again, drawing trend lines on the 14 RSI. These trend line breaks have been fantastic for sell signals and buy signals. So this hasn't broken the trend line for a sell signal yet. Next. Chart number 9, here's a zoomed in daily view. Again, we're still above the 9-day exponential moving average. So as long as we're above that, we're still uptrending. We're still above this uptrend channel. So, just kind of meandering here, still holding this RSI trend line. Next. Chart number 10, here's the KISS trend system. Again, it is long. It went long there in the end of March. And price has just been kind of drifting higher. As you can see, it's probably the best word, drifting. So far, trailing stop still pretty wide on this. So would like to see that move up a bit. Next. Chart 11, here's the 4 time frames we like to follow. Really not a lot to say here. We're above the ATR, trailing stop on all the time frames. We have a little resistance cycle here on the 78-minute chart. Again, price is just drifting, guys. Next, chart 12, here's a half-day chart, 195-minute. Again, we had that inverse head and shoulder pattern. I talked about that a few weeks back. That's been playing out. We're still holding this uptrend line here. We do have this MACD divergence building, RSI divergence building, but we haven't had a trigger for a sell yet. Remember, divergence is not a sell signal, but it is something kind of a yellow light to be at least on the lookout for a reversal, but nothing yet. Next. Chart 13, here's the 2-hour review. Now, this is the chart I've been discussing, and I discussed it in my last YouTube video. But, we talked about back in early April, we talked about that move up, that strong move up being a wave 3. Okay, and that ended being the case. We had a wave 4 pullback, which we favored. Go back and listen to my videos a couple weeks ago. So that played out. We had a wave 4. We're working on this wave 5. It's possible it completed, or it may still work higher, which I still hope we get a little higher, into the end of the week. But, again, so work on this wave 5. If this is the correct wave count, the issue with Elliott wave, as many of you may know, there's many alternatives. All right, it can be very subjective, but, this does look like a viable structure. So we're working on this wave 5. We have wave 1A, 2 of B, and we're working on a C. So once this wave 5 completes, I'm viewing this more as a 3 of C. Then we should have a pretty healthy wave 4 pullback. Okay. Again, this wave 4 pullback, could be 100, 150 points. So be aware of that. That could go anytime. And then once that's complete, then I favor maybe another move up in wave 5 of C that could take us up, well above 4,200, maybe 4,300. All right, some things to watch over time is this trend line on the 14 RSI. Breaking that would be bearish short term. And on the 60 stochastic at the bottom here, breaking the 80%. But we're still no changes here, but we're working on this wave 5 of 3 of C. Again, I am looking for an eventual wave 4 pullback here. And the systems that are short, the DVDS, I think they'll be able to cover on that pullback. Next. Chart 14, here's a 60-minute view. Again, just showing that uptrend channel, which we're still continue to hold. Here I added a little trend line under the RSI 14 to use as a possible trigger short. So again, these are the charts to monitor. Remember, guys, if you're watching this on YouTube, we provide the live chart URLs to these charts so you can view them updated versions days later right from your browser. That's the benefit of being a subscriber. We give all the live charts to this, not just these static images you see here. Next. Chart 15, here's the SPY 60-minute chart. Again, the same thing, but tradable ETF. Nice clean uptrend line to watch there. Trend line on the RSI 14. Next. Chart 16, here's a 30-minute view. Again, kind of wedging here. We're continuing to form higher highs, higher lows for now. Next. Chart 17, here's the triple Qs weekly. Again, no changes really this week. Up, it's basically flat for the week. So it remains to be seen overall if we can get to these other fib areas. It's obviously been a much better year than last year. Again, you can see how the moving average ribbon's a great guide. When it turned bearishly stacked early last year, and every time it pinched bearish, gave you great shorting opportunities. But this year, it went to a bullish stacking. You had a first pinch right there at the March lows. But again, I don't view this as a new bear market. I think overall we'll form some sort of lower high and then come down again this year. Recession is coming, as you know. A lot of companies laying off. Some of the companies have beating earnings, but remember, a lot of these earnings are revisions that were revised down previously. Next. Chart 18, here's the daily view. Again, one mapping. We're still holding the 20-day simple moving average here. Can we get another pop short term for a 5? We'll see. No changes here overall though this week. Next, chapter 19. Here's a 2-hour review. Again, you have higher highs, higher lows. These could be used as trailing stops. You could also probably put a stop right here at 33.16. This is your resistance, obviously, right here. Finally, chapter 20. Here's a 60-minute view. Shows you the same thing and those higher lows. Next, chapter 21. Here's the triple Q's KISS trend system. Again, no changes here. This went long earlier than the S&P back in March 13th. So it's got a nice winning trade here. Trailing stops are profitable from entry. I would like to see these moved up. Next, chapter 22. Here's the 4 time frames we like to follow. Again, we're above the ATR in all these time frames except for the 130-minute, which is resistance. We have a little end of bull cycle resistance here in a 195-minute to be aware of. And on this 78-minute, notice how price has just been really choppy, oscillating between the cycle indicator. So that tells you you're in chop. So when it finally breaks through one of these cycles, that should be a trending move, whether it's up or down. Next, chapter 23. Here's kind of a breadth indicator, guys. So this is the NASI summation index with the 2 and 5 exponential moving averages to use as signals. And you can see how overall these signals, while not perfect, overall match price pretty well, give you some pretty good objective buy and sell signals. You see that? Sell signal here, buy signal here, sell, buy. They've been pretty good. But you can see the obvious difference here. We had a obvious higher low here, and the NASI, the 2 EMA did not cross above the 5 EMA until the triple Qs had taken out that high. So look how much it's lagging here. Just look how much it's lagging here relative to this. Again, what this shows you is, and as many of you may know, the issue with the NASDAQ is that it's essentially just a handful of stocks make up such a huge weighting on it. Next, chapter 24, here's IWM small caps. So we have a higher low here from early April. It'll be a stop if you're long. Otherwise, short term, we're continuing to struggle at this 200-day moving average, and you have the 50-day moving average below. So another thing to watch, the trend lines on the RSI 14. You get a nice objective buy signal back here. That was a pretty good entry in March. But you now have a trend line to watch to use as a sell signal or exit signal if it's broken. So that does it on the indexes, guys. Let's go ahead and move on. Look at some indicators. Chapter 25, here's the VIX. The VIX continues to melt down, but it is nearing its lower Bollinger Bands, okay? So be aware of that. An objective sell signal would be if it goes below its lower Bollinger Bands and closes back inside per the rules here. But this is getting quite low. Next, chapter 26, very short term, we're monitoring this potential wedge pattern, falling wedge. You can see the wedge and MACD divergence and RSI divergence. So if this wedge were to rally, break out, obviously the market would pull back. Remember, I am looking for a potential fourth wave sometime soon. Next, chapter 27, here's a comparison of the VIX to the VVIX. Now look at the one thing that really stands out here. VIX has been declining here, and look at the VVIX. That's the volatility index of the VIX. Look at these two big candles. Now clearly people are hedging, positioning into the OPEX, etc. on the market, but that is definitely something to be aware of, and let me show you. So chart 28, here's another chart. This is the VVIX to VIX ratio. This is the S&P below. And look at how much of this ratio has spiked. What I've noticed is when this ratio, VVIX to VIX ratio spikes, and it's well outside its Bollinger Bands, that can occur near some market tops. So be aware of that. That has me a little cautious. Next, Chart 29, here's the VXN. That's the volatility index for the NASDAQ. Now it barely closed below its lower Bollinger Bands yesterday, closed a little back inside, so that's a little warning here. Next, chart 30, here's a chart of it's a 60-minute chart, shows the S&P versus high yield corporate bonds, HYG. And yesterday morning, while the S&P made a higher high, this made a lower high. And this is one of the most outstanding indicators I've seen for divergence. S&P moves with high yield corporate on most occasions, but when you have these divergences like back here, it was a nice low, same for here, and you get a little recent divergence. So this is a very useful chart to save on your side. Again, we give the live chart ULs for these. Next. Chart 31, here's the S&P large cap advanced decline versus small cap advanced decline. Right now you have a negative divergence here. This large cap's making a higher high. This is making a lower high. Now that could be negated, right, on a move up, but right now there's a divergence here, and that's a warning. Okay, just like back here in March, mid-March you had a divergence. That ended up being a nice trade low, just like it was a trade low there in December and in October. So we do have a divergence here to be aware of. Next, chart 32, here's the S&P with the NYMO. We do have a divergence forming on the NYMO here. But as I've shown before, you typically don't get your strong trending moves until this goes below zero, so still a little room. Next, chart 33, here's the bullish percent S&P index with the 9 and 20 moving averages to use as signals, general buy and sell signals. Nothing really glaring here yet. Let's move on. Following up on a couple of sectors, here's XLK Technology, again, still holding its 20-day moving average. Again, 3 stocks make up 50% of it roughly. It's pretty skewed. Next, chart 35, here's XLC Communication Sector. We had a little wedge that we were showing on a weekend. It did pull back, testing the 20-day moving average now. Next, chart 36, here's XLF Financials. It's rallied back to the 200-day moving average. You have the declining 50-day. I do think up in here is an area where it may struggle. It's had a nice rally off of this March low. Remember I talked about this 5-wave move down, and whenever you get 5 waves, you generally see a decent reversal, and that's what we've gotten. Next, chart 37, here's the bank sector. Now, the bank sector is lagged more than the financials, but it's finally starting to move out of this coil here. Remember, I showed this last week. Next, chart 38, here's KBE. That's the bank ETF. This is a 2-hour view, beautiful coil. I talked about this the other day, going long with a stop here, higher low. Then you got a second higher low here. Started to break out today. The futures are down a little bit tonight, but we'll see how this does tomorrow. Next, chart 39, here's KRE. That's the regional banks. Of course, they've suffered the most, but finally breaking this coil. I've had this drawn for a while and broke above this today for a trade. Finally, chart 40, here's KRE on the 2-hour view. So nice coil here to use as a trigger. Tight stop here can now be that little higher low at 42.35. Next, chart 41, XOP Consumer Staples, one of the defensive sector's been doing well here. There's a little divergence showing up now, though. Still over its 9 EMA. Next, chart 42, utilities, same deal. Money's been rotating into this area, still holding up well. All right, moving on to commodities. Chart 43, DBC. This is the weekly chart. Down this week, 1.5%. Basically retesting this trend line. Again, I do view this as a long-term bull market. Just pulling back a little bit. Next, chart 44, here's the daily view, pulling back here. Watch the 20 and 50-day moving averages now for support. Next, chart 45, crude oil. It's pulled back logically from the 200-day moving average. It was logical to expect that. Now you have the 50, 200-day moving averages below. Next, chart 46, here's the weekly view. So shows you down about 4% for the week. Again, nice rally off that 200-week moving average about a month ago. Logical pullback, though, today from the 200-day moving average. Next, chart 47, here's the OVX crude oil system, volatility system. So this gave a great buy signal back there, basically at the lows in mid-March. This doesn't give you where to sell your signals. It's now waiting for a short signal, and we don't have one yet when this needs to go back below its lower Bollinger Bands. Next, chart 48, natural gas. Again, this popped this week. Down today pretty big though, but it's still up 5% for the week. Next, chart 49, here's the weekly UNG. Had a little tight wedge. Crude oil or natural gas definitely been decimated since September of last year. Look at the ETF here, $34 all the way down to $6. Next, chart 50, here's the daily view of the commodity itself. I said to watch that 50-day moving average. It pulled right back from there. Next, chart 51, DBA commodity ETF pulled back today, but again, it's over this resistance, so weekly still up. Again, longer term, I view this as an uptrend, bull market. Next, chart 52, DBA on the daily. Again, nice break, nice move here over the last month. This is now your big support, this 2074. Moving on, chart 53, here's the 10-year Treasury yield rates. They're up a little bit this week. Bounced off that lower channel line a few weeks back as the MACD had recycled back to zero. Next, chart 54, here's the daily view. Nice rally off that lower channel line, 50-day moving average here. Again, as I stated before, the question is it going to make a lower high within this channel? Remains to be seen. Next, chart 55, here's TLT 20-year bonds. Again, perfect pullback from that resistance. Look how perfect that resistance has been. It's hanging right around the 50-day moving average now here. Moving average ribbons pinching here. Stochastic is oversold, so I want to see if it can hold support here or not. Remember, as this moves down, rates move up. Next, chart 56, here's high yield corporate. Remember, this was diverging with the S&P. Recently, I showed you on the 60-minute. Here in the daily, it's lost the 9 EMA. Now watch the 20-day. Remember, the market moves with this, so it's why you always want to watch it. Next, chart 57, Bitcoin. So Steve drew this as a tight little rising wedge yesterday. Broke down today. You can see the MACD divergence there. Next, chart 58, here's the 2-hour review. Just perfect technical analysis here. Look at this tight coil you had. Huge pop out of a coil, which is typical. Then you had a slanted head and shoulder pattern, which broke down, rallied to back test that neckline. Just absolutely gorgeous how that played out. Now there is a little support down in here where Bitcoin is trying to bounce from. Next, chart 59, US dollar, up today a little bit. Again, slightly out of this downtrend wedge that we drew, but it's still below the 20-day moving average. I would like to see it break up if it's going to do so, but there is potential for this to try to rally up a little bit. That would put further pressure on gold. Next, chart 60, here's the ETF. Again, it's still sort of in this pattern, so it hasn't confidently broken it. It could easily go back down if it wanted to. Next, chart 61, here's a 2-hour review of the ETF. A diamond pattern here. So this is likely to break within the next day or so. Next, chart 62, gold. Nice pullback over the last week. Again, it got very overbought up there. We had the RSI divergence. And again, we've been expecting a pullback in gold, especially since the stocks are starting to lead to the downside. You can see on that the ratio, the GDX-GLD ratio. Remember, the ratio is a really great thing to follow because the stocks lead. Next, chart 63, here's another daily view. This one doesn't have the ratio, but you can see the divergence on the indicators. Next, chart 64, here's gold weekly view. Again, it also got up near that upper channel, which was a logical area for it to pull back. Again, guys, I view this in a bull market. So overall this year, I think gold is going to bust out of here hard. Go well into the 2000s, 2,500, maybe even 3,000, who knows. I do believe gold's going to have a pretty good move this year. So Definitely want to be positioned into that, especially on a pullback. Next, chart 65. Here's the monthly view. Again, you essentially had, a third wave high here in 2020. You had an ABC fourth wave pullback that bottomed last year. We're now, potentially in a fifth wave, and I view a pullback as a buying opportunity, and I expect a rally after that. Okay. Next, chart 66 here is silver, little pullback, still holding that 9 EMA, recovered it today. Silver's outperformed gold lately. Next, chart 67, there's the weekly view. This broken downtrend line is now your support. Next, chart 68, GDX. GDX stalled last week right at this channel, which we expected. So far, it's consolidating a bit. Next, chart 69, GDX daily. Again, we expected a pullback. It's had a heck of a run from this buy trigger back in March, from the RSI trendline break. You got a little RSI divergence here, and it's been pulling back. It's below the 9 EMA here, so now your support is the 20-day moving average, and this previous resistance now turned support. I do expect it to try to bounce off the 20-day moving average, and especially some of the stocks. So, if you want to watch for to buy some of this around there, you could use a limit order. Next, chart 70, here's another daily view, shows the ratio here, which again, short term, the stocks have been leading down. This is your big support area now. These are potential trailing stops. Next, chart 71, here's a 2-hour view. Remember, I was showing this trend line on the GDX daily ratio as well as price. Well, this triggered last week for a short, and so far it's played out. Again, don't get me wrong, guys. Longer term, I like this long. It just got overdone last week. Was its place to take some profits or add some hedges. Next, chart 72. Here's a 30-minute chart of dust. That's the double inverse ETF for GDX. So it broke out of this channel last week, back tested it, and it's moved up. Next, chart 73, here's the GDX GLD ratio. Since the stocks lead, I like to see what the ratio is doing. This is a direct analysis of the ratio, the moving averages, etc. Again, short-term ratios pulling in a little bit. Moving average are obviously still very bullishly stacked. So overall, this sector is very strong. Just having a nice little pullback, which we wanted. Next, chart 74, GDXJ, that's the Gold Miner Junior ETF. It's near its 20-day moving average, so this is an area that we may see a bounce from right here at the 20-day. Since it hasn't retested the 20-day for a while, this is a logical area for it to try to bounce from. Next, chart 75, SILJ, same deal, right at the 20-day moving average now, an area to watch for a potential bounce. Next, chart 76, AGI. Here's some of these other ones that are at their 20-day moving averages. Next, chart 77, AU, another super strong one. Finally pulling back here a little bit. All right, guys, let's move on to other trade ideas. Chart 78, Apple. Apple formed that higher low. It's been moving nicely higher within this channel. Again, always got to keep an eye on Apple since it's just a huge weighting. Next, chart 79. Here's the 2-hour review. On Monday's newsletter, I showed this little tight pennant, and that's been playing out for an upside break. Next, chart 80. Tesla. Tesla had this coil. It actually broke down this morning, and then, of course, this evening, it's down strongly on earnings. Next, chart 81. APLS was a long idea of ours back in March. The cup and handle pattern. Played out beautifully. It still continues uptrend. Trail your stops below the 9 EMA. That's all I can say. Next, chart 82, SPNT, also a long idea of ours back in March. Played out fantastic. Next, chart 83, Toll Brothers was a long idea of mine on Monday. It's a home builder stock. Broke out nicely. Next, chart 84, KBH, another one. It's trying to break out of here a little bit, kind of a cup and handle look to it. Next, Trevor 85 Nail. That's the triple long ETF for the home builders. Had a nice little break. I love the how they name some of these ETFs. Nail. Next, Trevor 86 IoT, one from long idea from Monday. Holding up here well. Nice little breakout. Next, Trevor 87 BTAI, long idea that broke out on Monday, as you can see. Next, Trevor 88 COLB. Here's a long idea from Monday. It's a bank. It hasn't broken out yet, but you got a nice little trend line here to monitor for a trigger. Next, Trevor 89 Rambus. Still monitoring this potential long. Going to watch this 20-day moving average, see if it can find support there. Next, Trevor 90 CDZI, one I mentioned on Monday, but it did bounce off its 50-day moving average here. Kind of a cup and handle look overall. Next, Trevor 891 AutoZone, been one hell of a strong stock. Next, Trevor 892, there's the weekly view. Look how strong this puppy's been. Had a great year in 2022, doing great this year. Again, recession's coming, guys. More people are having to fix their cars themselves. AutoZone tends to do well in recessionary environments. This overall, this major is quite a bit higher. Very expensive stock. A lot of you might not want to touch it. Kind of reminds me of Tesla in the old days before they split it a bunch of times. Next, Trevor 93 CLX, a pattern we're monitoring as well. Like I said, we're not seeing a lot of trade ideas, guys, and we're not going to force the issue. We have plenty of system trades on. Again, my suggestion would be to keep the number of items that you're following small. Don't try to be a jack of all trades. And being a specialist is better than being a generalist. All right, guys. Have a good evening. We'll see what happens tomorrow and this week. Again, I'm hoping the market holds up in here through options expiration. Maybe get a pullback next week would be my guess. And but otherwise, the uptrend hasn't changed. And that'll do it. See you guys tomorrow. And I do the newsletter on the weekend. Take care.